Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, show where we'll help you understand the closing action on the D Street. Well, 26,000 is again knocking at your doors. You can see the Nifty now 95 points higher in trade, above the 26,000 mark. Yet again, this is the third attempt in the last 3 weeks that we've made towards that 26,000 mark. Remains to be seen whether there will be yet another time some selling pressure that will be felt on these higher levels, or will we make an attempt to retest our erstwhile record highs once again. But beyond the surface, if you look at the Nifty Bank, that's at a record high level, smartly moving up in trade, 440 points higher. And now you can see the Nifty Bank above 58,939, again at the day's high point, with huge volumes being seen. And PSU banks now at the front row of performing within the banking space, 0.7% higher for the Nifty Bank in trade today. Beyond the surface, you can also see that the Nifty Mid-Cap 100 index is also at a record high level yet again, 0.6% higher in trade. Remember, last week was the first time when we saw after a long time that the Nifty Bank hits record high level, and now it's continuing with this smart move. Now, barring the metals, rest all of the sectors are actually up and about in trade, so it's panned out to be a rather good Monday in trade so far. Over 1% gains for the PSU banks, that's the top moving sector. You have autos, private banks, mid and small caps, financial services, also up and about in trade. Let's look at the top movers on the Nifty. You have Eternal, the parent company of Zomato, up by nearly 2% at 309 odd levels today. Tata Consumer Products up nearly 2%. You can see Max Health, after those earnings that has been buoyant through the day, about 1.5% higher. From the auto space, you have Eicher Motors, Bajaj Auto, both of them also doing pretty well and among the top moving stocks as far as the Nifty is concerned. What has slipped, however? Tata Motors, the PV company, which has actually seen the pressure built up in the earnings, and therefore that shocker has led to a sharp downtick as far as Tata Motors is concerned. Nearly a 5% downtick for the Tata Motors passenger vehicle stock. Adani Enterprises, UltraTech Cement, Jio Financial, Tata Steel, these are all the other stocks that are also reeling under some pressure in trade today. But let's welcome our guest on board. Neeraj Dewan is now joining in to share with us his views on the markets. Warm welcome to you, Neeraj ji. Good to have you with us yet again. Tell us, what's the gut feel like this time around? 26,000. Will we be able to sustain the resistance, selling pressure, and make a dash towards a record high level yet again this week?
Yeah, good afternoon. Yeah, actually, we will dash towards all-time high, whether this week or next week or anytime this year is difficult to say. But around the higher level, we saw 26,000 earlier. We saw some selling. So this normally happens when you reach a benchmark. There is always some profit taking which happens at those levels, especially when large caps have been doing well and they're consistently doing well over the last 3-4 weeks. But I'm positive on the market. I think any sell-off which happens because of market touching 26,000 or any news flow which happens, I think should be used as a buying opportunity.
Okay. We are also at the end of Q2. At the end of Q2, what exactly is your analysis? Where do you think you have done some earnings upgrades? And do you also see a sharp markdown in terms of earnings downgrades, the way we were seeing in the first 2 quarters? Now, by the end of the second quarter, do you think we are better off?
Yeah, this quarter has been better. So there are very less markdowns and there are more markups after this quarter results.
Okay.
The growth that we saw previous couple of quarters was very low. This time we've touched, 10, 11, 12%, even 15% in some sectors. So the growth is better than what we saw year on year last quarter. This quarter has been much better. I think that is what is reflecting in the markets also. So now you see the rally is becoming broader. So more and more stocks have started participating.
Okay, got that. Let me actually just bring your attention to what's buzzing in trade today and ask your view on that front as well. PSU banks, which have gained certain strength in the last couple of weeks, is pulling up further. We can see that the index is yet again a percent higher in trade today. What are you doing with the PSU banking names right now? Because there is a lot of anticipation around how the merger could be playing out. The government has already given their indication. There could be also changes as far as the foreign ownership rules are concerned in the PSU banks. So once these things finally come to light, before that, what should be the positioning that traders and investors must have of PSU banks?
See, I've been positive on PSU banks for the last 2-3 months. There were two, three reasons. One, interest rates were going down, liquidity was increasing in the system, and that initial impact which happens when interest rates go down of contraction in NIMs, and that happens in the initial quarter or so. So that also now, once the demand for credit goes up because of GST rate cuts, businesses doing better, year-end requirement for credit. So because of all those pressures, I think there would be an increase in requirement for credit. So that will also, the impact on the NIMs will start getting reduced, and NIMs will come back to what they were earlier. So balance sheets have been strong for PSU banks. Last 2, 3 years, you've seen a lot of cleanups. There've been a lot of recovery. So that balance sheet wise, they've been strong. Interest rates are low. Liquidity is good. So all this was required for a banking sector upgrade. And PSU banks are one which are available at 0.5, 0.6, book value. Especially stocks, when you go to second rung stocks like a PNB or a Canara Bank, Union Bank, they were available really cheap. Now, those stocks have run up, but still, they are still below book. They will be at 0.7, 0.8, 0.9. So still there is value in PSU Bank. And what you rightly said, that there is an increase in FDI. Finance ministry has been talking about consolidation in the banking sector. So all that really augurs well for the banking sector and specifically PSU Bank.
Okay, got that. But when it comes to the PSU oil companies, there's a big news that's unfolding today. Remember, viewers, in a big move to diversify the energy supplies, India has now signed a major LPG deal with the United States of America. The deal was announced by Petroleum Minister Hardeep Singh Puri on social media this morning, calling the deal historic. The minister also said that PSU oil companies have for the first time signed 1-year deal to import LPG from the United States of America, and India will be importing 2.2 million tons of LPG. That's around 10% of the annual imports that we do now from the US as well. Importantly, this deal also follows repeated statements by the US officials that India will soon be increasing its energy imports from the US as well. For more on this, I'm now joined by my colleague, Business Today Television's Aishwarya Patil, to give us more details on the same. Aishwarya, big news for the energy sector coming in, a historic first one ever imports, diversification that is coming in as far as LPG is concerned. Tell us what has been the idea of the government. What would this really mean for the prices for the common man, at all going forward from here?
Well, as far as the prices are concerned, oil majors, IOCL, BPCL, etc. Of course, those finer details are still yet to come from some of these PSU energy companies, but definitely I believe Donald Trump and the US government could be quite happy about this deal that we've struck. That aside, of course, as you mentioned, 10% of the annual imports will come from this 2.2 million ton per annum kind of LPG imports that we're talking about. And he did mention that oil PSU names such as BPCL, IOCL, HPCL, some of the leadership team did visit the US in somewhere about in the mid of 2025 and did engage in discussions. So what the decision here is in as far as sourcing is concerned is to get more affordable as well as reliable LPG supplies, is what the minister has said. And he also mentioned that the Ujjwala scheme has been maintaining the 500 to 550 kind of mark during this last couple of years, and they intend to maintain this pricing, is what the minister has said. Going forward as well, we'll get in touch with some of these oil PSUs to understand what the pricing will look like. But so far as we've spoken to these players, they have mentioned that it will be somewhat muted or in the same range as it was in the last couple of months or so.
Okay, got that. So that's going to be an important one. Let me actually bring in Neeraj ji here. Neeraj, what would you believe this would lead to? Would you say that this is at least one step closer to the US-India trade deal that we've been waiting for eternity to take place now?
Yeah, that's what I was also thinking. I think this is better in the sense that the trade deal which they're talking about and which they're negotiating, I think this will help in getting a decent trade deal. So I think that was a positive. I think market-wise, for oil companies, I don't think it'll make too much of a difference. But it'll be at market price or whatever prices they were getting earlier. So they will not shift to US. But I think for our country and for the market, generally for the market, it'd be positive to get some trade deal happen fast.
Okay, got that. Let me also actually bring in these stocks for your, understanding and telling our viewers as to what should you be doing when it comes to the oil and gas stocks, especially these OMCs, the oil marketing companies, IOC, BPCL, HPCL. How are you looking at the current stock price performance that has been there in the offing? In fact, in Q2, the results have been better with respect to the GRMs, at least for the entire refining space. What's the suggestion that you would have on OMCs right now?
I think marketing companies should continue doing well because crude has been weak only and it's been going down, and there's no reason why crude should really go up. And there's not been any change in the petrol pump prices as far as oil is concerned, petrol, diesel. So I think the company should do well. They are raking in profits and they should continue doing well till you get some meaningful reduction in the petrol pump prices. So if that is not happening, I think they are in a good sweet spot and they should continue doing well.
Okay, fair point. In fact, let's shift focus and now talk also about the primary market space. This is of importance today because the chief economic advisor has now called out the IPO boom, saying the money is not being used as long-term capital but has actually become an exit vehicle for early investors. V. Anantha Nageshwaran instead has called for a deep and reliable bond market, which he says is a strategic necessity. Let's actually listen into what he had to say and then we'll focus on this conversation too.
Our capital markets too must evolve not just in scale but in purpose. India's equity markets have grown impressively, but initial public offerings have increasingly become exit vehicles for early investors rather than mechanisms for raising long-term capital. This undermines the spirit of public markets. India cannot rely predominantly on bank credit for long horizon financing. A deep and reliable bond market is a strategic necessity, particularly for financing long-term national objectives.
Right, Neeraj, coming to you on the entire space, I think this space was already getting into a hot debate already. The steep valuations that some of the new age companies are bringing their IPOs, the undying appetite from retail investors and all institutional investors for these large IPOs that are coming in, getting massive subscriptions. Only a few of them have actually managed to deliver great returns. Case in point, Grow. Now on as of today, already in the fourth day of listing, we've already seen the stock would jump up about 70% from the IPO price, and therefore you see 178 right now, 19.8% of a rally for Grow at this point in time. So you can actually see how the stock has performed, over 70% gains that can be seen for the company just from the IPO price. So there are these very few success stories that investors have to celebrate on, but most of them have actually struggled to sustain at those valuations in the listed sphere. How are you advising investors to look at these outperformers, and therefore looking at them, should one be really going big on all these IPOs that are coming in, or be very cautious? How are you advising them?
After seeing Grow, it gets very difficult for even the investors to decide what to do, because Grow listing was quite muted. I think it listed 3-4% above the IPO price. Though, so on the listing, no one really made money immediately, but even someone who bought post listing today, when you look behind, you say that you missed an opportunity. But I would say that there will be 1 out of 10 or 1 out of 20 such cases, which may happen. But I think let's be cautious, because most of the IPOs which are coming right now are coming at very lofty valuations. And we've seen people, they've lost money in the last few IPOs also. So you may miss 1 or 2, which means something like a Grow, for example. But I think better to be cautious at these valuations. In the listed space, there is still a lot of value. You have listed companies with good track record, which are available, decent valuation. And if you have to invest in an IPO, I think you have to really be very careful of the valuation that you're investing in.
Okay, fair point. Let's actually talk about Grow. 1 lakh crore rupees of a market cap now getting seen on the company. The promoters have actually become billionaires with this IPO getting launched as well. Of course, listing gains and the last 3 days of gains have made investors happy. But what should one do at this stage after this substantial, almost 70% kind of a move being seen? What should one do now?
I think at the IPO price, it was little, I think, fair to, little fair to expensive. So it was not really cheap at the IPO price also. But after this run up, I would say once you book some profits, if you able to get a lower level, then wait for an opportunity to buy. I think if they already trading at expensive valuation, even if you look at Angel One, I think it's one-fourth the market cap of what Grow is now today after this run up. So there is value across the listed space also. I think at this price, I think one should book profits as far as Grow is concerned.
Fair point. Let's also try and understand any other IPO related stocks that you have watched very closely or you have personally liked as well for investors to really gauge.
Actually, recently, last 2, 3 months or 4 months, the IPOs which are coming at very high valuation. So I've not been convinced of any IPO valuation to really invest into it. So no, not really, not the last
Sure.
few IPOs.
Okay, let's in fact talk about some of the other buzzing spaces of late. It's the defense space that clearly had garnered some more strength over the last entire week. Today it's flat with a positive bias, but there's again some news flow there which will bring our attention there. Many select stocks are also buzzing, like Idea Forge on a big order has jumped up today pretty substantially. Remember that we are actually getting to hear from the Chief of Defence Staff saying that or cautioning rather the viewers that they are one of the strongest words in anyone's defense forces to India Inc. so far that we've actually heard. The Chief of Defence Staff has now urged private defense companies to put nation before profit. He's actually asked them to be truthful about the levels of indigenization that they are incorporating in building these defense ammunition. And but he's also all but accusing the industry of lying at the same time. So here's what General Anil Chauhan had to say, and then we will of course do a deeper conversation on that.
We expect a bit of nationalism and patriotism in your profit-driven endeavors. I'm given to understand, actually, the army was telling me that they've been scouting around for 5th and 6th EP procurements. Most of the people have overpromised things and they fail to deliver in that time frame. Now, this is unacceptable. Defense reforms is not a one-way street. Industry will have to be truthful about their capabilities to us. You can't leave us in a lurch. Means you sign a contract and you don't deliver at that particular time. It's a capability that is being lost. You have to be truthful about your indigenous capabilities. There could be security related issues. A lot of industries say, okay, this is 70% indigenous. But actually, if you find out, it is not. So you have to be truthful in this because it is related to its questioning matters of security. You will have to be cost competitive. Cost competitive is not for selling to the Indian Armed Forces. You have to be cost competitive so that you can compete in the foreign market. You can't have products which are overpriced. And you'll have to deliver things on time.
Okay, Neeraj, would you throw some light on this? Of course, we've been seeing these defense stocks all of last year shooting through the roof. Thereafter came a period of consolidation and volatility because there were question marks being raised on whether these companies will be able to fulfill all these big orders that are coming their way, whether the execution is on time. And now the Chief of Defence Staff has actually, hinted at, of course, looking at patriotism beyond profitability for these companies. He's also talked about one has to be very transparent with the kind of indigenization that you say that you are doing but are actually doing or not. So that's another aspect that he's brought about there. And of course the third aspect is on execution. You definitely win big orders. Recently also we heard and saw so many headlines with respect to defense, DAC clearing up 79,000 odd crore rupees of defense orders. More and more companies are getting these massive plays, but are they really on track to prove their mettle?
Yeah, actually, last year, I think around June or so, when a couple of mutual funds also came out. I think April, May last year, with the defense theme mutual fund. I think that was just a theme that time. But now I think it's become a proper category in investing industry where people are investing seriously. With the kind of returns you've seen over the last 1.5 years, it definitely demands a look at as a serious industry. So there is going to be, there are going to be a lot of companies coming in. So what, General also said rightly, or what you also making a point, that we have to look at companies which are able to execute, which have a good track record, which have that kind of technology, indigenous technology to really prove that they have been doing so much research and now executing based on that research. So definitely this sector is there to stay. The sector is there for someone who's invested in the market for a longer term, because these projects are long-term projects and orders get delivered over time, execution happens over time. Some of the sectors like a shipping sector, like you names companies like Mazda or GRSC, which into shipping, have 2 to 3 years of timeline where they deliver. So the delivery will happen, execution will happen, orders book are great. Now the decision is that you have to be with the right company. And if you have the right company which have a good track record, you will make money. So if you're a long-term investor, select companies, there's so many companies which have been there listed for some time, whether it's a BEL or a HEL or a Mazda Dog, you have a good set of companies into the sector, and they've proved they've been able to deliver time and again.
Okay, fair point. Last 3 minutes to go before we shut shop for the day. So let's focus a bit on the markets yet again. If not defense, which are the other sectors that you are turning more bullish on for the second half of this fiscal year, Neeraj ji?
I think there's one sector which is, project, capital good, infrastructure, which this quarter also the earnings were not that great. Actually, expectations were low. Like companies like L&T delivered decent earnings, even on lower expectation. So this sector is one sector where the second half is very good. So one should look at construction-linked infrastructure, capital good sector, I think, which for the next half can deliver very good returns because order books are very strong and interest rates are low. The execution will also pick up. So this is one space I'm very seriously looking at and investing in this space.
Okay, fair point. Let me also ask you on the new age tech stocks bit as well. This time around in the earnings, we have seen quite a bit of the companies, even beyond the frontline ones that we always talk about, Zomato and Swiggy, that have seen some profits on the bottom line. Operationally, they are in a better shape. The commentary is focused more on the profits, and the stock prices have also reacted in the same fashion. New age tech stocks, where do you find confidence at the current levels?
I think even the food delivery business, you're talking about Zomato or a Swiggy, they are good companies. They will deliver, they will make money, but then there are cycles. So, last couple of quarters back, they put a lot of money in quick commerce. So it takes time to get the return. So one should play and buy them on dips because the stocks do see dips because the performance can't be steady one way. When we're right now spending a lot on capex, they're expanding, whether it's quick commerce or their go downs and delivery outlets. So I think one should be patient, invest on dips and invest for a longer time. So they will definitely make money.
All right, but let me also just bring up a few other spaces for you. Where do you think you would want to probably highlight any red flags?
I think one has been investing a lot in pharma stocks. Pharma stocks are one where you've seen good returns also. So there, I think one has to become a little more stock specific now. So we've seen a good rally across, a lot of stocks have performed. So be stock specific as far as pharma is concerned. And even when you look at some of these IT companies, there also one has to be very stock specific. I think I think the worst may be over for them. But to get those returns, then one will have to wait. So there will be ups and downs in the sector before you start really making serious money. So be a little more stock specific as per these areas concerned.
Okay, fair point. All right. Thank you so much, Neeraj ji, then for being with us and for sharing with us your views
Thank
on the
you.
markets. We are closing up as far as the market edition is concerned, 26,012. That's the closing level of the Nifty. Managed a century on the Nifty today. By the end of the day, we moved up to the high spot, 0.4% higher. The Nifty Bank at the mid cap definitely at record levels, closing in strong on the day one of this week. And what we've also seen is that several sectors, in fact, now all of the sectors by the end of the closing action have moved up into the green, led by, of course, PSU banks, followed by autos, private banks, mid and small caps, real estate. But when we look at the other stories like FMCG, IT and metals, those are also pulling up now towards the end of the session as well. And India VIX, meanwhile, viewers, has slipped and you can see levels which are still comfortable, 1.5% losses that can be seen on that one at about 11.9 odd levels. So the volatility is also on a comfortable zone right now. Eternal, Tata Consumer Products, Max Healthcare, Eicher Motors among the top movers. On the declining end, you have Tata Motors, Adani Enterprises, UltraTech Cement, and also Jio Financial Services, Asian Paints, as all those stocks that in fact dragged in trade. Let me also pull up the winners and the losers from the broadest index, the Nifty 500, for all of you as well. Well, when we look at the names here, what is in fact dragged is Gabriel, Deccan Cements, for instance, that declined in trade. We also had names like maybe the smaller ones, Fiber Web, that's pulled down. You have Everest Kanto Cylinder, that's pulled down. Vikas Ecotech. These were all the stocks that in fact did not manage to move up too much in trade. But what moved up within the gainers was Narayana Hrudale, 14.5% higher. Earnings momentum that has pulled up the stock smartly up above 2008 odd levels. Look at MRPL, Jubilant Ingriva, Hoodco. These were all the stocks that actually rallied in trade. Right, viewers, with that we wrap up the market closing edition right here. But do stay tuned, as beyond the market coverage, you will get to see all the market buzz, all the buzz with regards to business and finance. And in case you still want to catch up with all the market and questions about the portfolios that you have, tomorrow again we will start off at 9 a.m. and at 12 noon you can actually join in to get your questions answered on Daily Call. Stay tuned.
Few leaders in India have shaped the economic narrative of their states, as Mr. N. Chandrababu